All right, let's dive right into it. Today, we're unpacking Johnson & Johnson's Q3 2025 earnings call. So, Johnson & Johnson just had what looks like a fantastic quarter, right? I mean, it was a classic beat and raise. They topped expectations, they guided higher, and yet the stock just stalled. It basically went nowhere. So, what gives? That's the big puzzle we're going to piece together today. Why the disconnect? Okay, first things first, let's check out the scorecard for Q3. And honestly, the headline numbers were just clean, really strong. It paints a picture of a company that's firing on all cylinders. Let's start at the top. We're talking total sales for the quarter, hitting a really impressive $24 billion. And then you look at the bottom line, adjusted earnings per share, or EPS, came in hot at $2.80. That shows some really solid profitability. You know, that $24 billion number, that's not just a big number. It's a solid 6.8% jump from the same time last year. That's real momentum. And this table really puts it all into perspective. This is the beat part of the story. You can see Wall Street was looking for some pretty good numbers, but J&J just came in and topped them. They cleared the bar on both revenue and EPS. Just a clean beat all around. So the natural question is, where is all this growth coming from? Especially when you consider they're facing a major headwind. Their blockbuster drug, Stelara, is up against new competition from biosimilars. You can think of those as generic versions of these really complex drugs. So let's peel back the onion here. And you really get a sense of the mood from management with this quote from the CEO, Wen Duato. "We are in a powerful new era of growth." I mean, wow, he's not just saying, hey, we had a good quarter. He's framing this as a whole new chapter for the company. That's some serious confidence. And they've got the numbers to back it up. Look at this. The Innovative Medicine division grew over 5%. That's despite the huge drag from Stelara losing exclusivity. So how'd they do it? Well, other drugs are just crushing it. Their oncology powerhouse, DARZALEX, was up 20%. And check this out. Their new immunology star, TREMFYA, soared 40%. It's pretty clear that these new growth engines are more than making up the difference. But you know, this quarter wasn't all about the numbers. Not at all. There was a huge piece of strategic news that dropped on the call, and it signals a massive pivot for the whole company. Yep, you're seeing that right. J&J is planning to separate its entire orthopedics business, DePuy Synthes, into a whole new standalone company. This is a huge deal. It's all about streamlining the business and really sharpening their focus. This really is a transformation. It's like they're going from this sprawling, do-everything kind of giant to a much leaner, focused innovator that's laser-focused on its biggest growth areas. That's high-growth pharma and cutting-edge medtech. And they're not just throwing this idea out there. They've laid out a pretty clear timeline. The whole separation is targeted to be done in about 18 to 24 months, and they told us to expect some more concrete details right around the middle of next year. Okay, so we've got a great quarter in the bag, plus this bold new strategic plan. So how does that all translate into their official guidance for the future? Let's take a look. And here's the raise part of that beat and raise we talked about. They actually bumped up their full-year sales forecast. That's another huge signal of confidence. And at the same time, they're holding firm on their already strong earnings outlook. But here's where it gets really interesting. Management didn't stop at just this year's guidance. They did something you don't see very often. They basically looked at Wall Street and said, hey, your models for next year, for 2026, they're too low. And they didn't just hint at it. They put a number on it. They said they expect revenue growth to be above 5% next year. Now, that's a direct challenge to the current consensus, which is sitting around 4.6%. You can't get a much more direct or bullish message to investors than that. All right, let's zoom out and put all the pieces together. You've got a clean beat, a higher guide, a massive strategic shift to focus on growth, and to top it off, management is practically telling Wall Street their future estimates are wrong. So where do we land on all this? After digging through this call, our rating for Johnson & Johnson is outperform. We just think the market's flat reaction, that big shrug, totally missed the bigger story that's unfolding here. So here's our outrageous but plausible take. The core thesis is pretty simple. We think the market is just sleeping on this. It's underappreciating what this orthopedic spinoff could do for growth and margins. So the trade idea here is to consider a long position, basically a bet that the stock will go up, because we don't think the price reflects this new, leaner, faster-growing J&J just yet. Now, what are the catalysts? We're watching for more financial details on that spinoff, and, of course, for those key drugs like TREMFYA and DARZALEX to keep up their amazing momentum. But there are risks for sure. They have to pull off this super complex separation without a hitch, and if their big drugs start to slow down, well, that could throw a wrench in the whole narrative. And of course, we have to end with this very important point. This is all for informational purposes. It is not financial advice. You should always, always do your own research before making any investment decisions.